As you all know that now we are finalizing our topic D, which is our accountabilities for the current and non-current liabilities. So I think it's important for me to re-establish it again so that we can just move forward. So the last week I didn't tackle it quite okay because we had a problem with our technical issue. So I've developed this content along with quite a number of examples, and then we'll try to actually unpack it and explain where it's necessary, so that you guys will be on the same journey with me. But when we look at the accountabilities for the for the current and non-current liabilities, that's your learning unit 13. We start with current liabilities. So as I've explained before, it is defined as a claim which a party other than the owners has the assets of the entity which originates from the past transactions because of the legal action. It may also be expected that the payment of a liability will lead to an outflow of the resources. Right. Looking at point 1 there, immediately when you sign up with your suppliers or the credit providers, it means that you're buying goods from them on credit. All right. So meaning that you're signing up for the legal obligation that you will be able to oblige in terms of making the payments in future. So that's when we realize what's called the creditors or the liabilities. All right. So in order for you to identify or to recognize what is called the current liabilities, you need to look at different aspects in a sense that it has to be payable within 12 months period. Anything that has to be payable in more than 12 months periods, that forms part of the non-current liabilities. But we'll jot down to that when we go down or when we go forward with our studies. So as I've mentioned, we've got two categories or two types of liabilities, which are your current and non-current liabilities depending on the period of payment. This is just what I've just explained now. If it is payable in 12 months period, it will fall under the current liabilities, and payment agreed in more than 12 months, it will fall under your non-current liabilities. Okay. So items that are specifically included under your current liabilities are your trade payables, is the most common one in most cases. Accrued expenses that form part of what we have to go back in terms of topic B, and the income received advance, the same. So installment payables on the long-term loan. So what you do is you apply for the long-term loan, which is going to be payable in more than 12 months period. But whatever the payment that you made in the current year, it's going to form part of your short-term portions. Right, the VAT that the company owes towards us, that's a liability. It's called the VAT output. Right, and you've got the bank overdraft. It's very quite common now. So most of the financial institutions, they've introduced this. I think people can apply it online. You can go to the ATM and apply for this one. Right, so looking at the trade payables, it results from the goods and services purchased on credit. So you would never have what's called the creditors or the trade payables creditors if the goods were purchased in any other form except in a credit form. Right. It may also result in a discount to be received should the payment be done in the agreed specified date, which is deducted from the purchases. So this is how the companies usually structure their discount and stuff like that. They develop what's called the internal policies in the company. So obviously the management and the credit managers and all of those, they're going to agree up for that. They sign up for that for their own clients, right? So they usually encourage you to make early payments so that your account could be settled. So it's going to be a fair thing because you're going to get a discount. They're going to receive the payments early, right? So according to that policy, they would say, okay, pay the capital amount, and then obviously we're going to reduce the interest paid and the other additional charges that are actually there. So in banks, I know they normally call it the settlements. So it means that you are settling your accounts early. Right. One of the examples that I've developed in the content, it says Putin Limited purchased the merchandise from Beld Trading with an amount of 1,000 Rand on the 31st of August 2021. And Putin Limited made a full payment after he was granted a discount of 15%. Right. Let's have a look at how that was recorded in terms of the ledger accounts. So you're required to do the ledger accounts. The first one was the trade payables control account under the Beld Trading. Okay, so you are debiting the bank there. Remember, you're making the payment. So initially when you purchase on credit, so the bank won't be affected. It's only the creditors and the product in question that you are actually applying for. So we are banking, we're under the building, they're receiving the money. The bank is going to go up with an amount of 850. Why 850 from the 1,000 rand? Because of the 15% of the discount that was granted for early payment. Right, and then we debit the settlement discount received with an amount of 150,000 rand. Okay, obviously that would reduce your bank account with an amount of, the worth of the goods with an amount of 150 from the 1,000 rand. And then we bring up the purchases with an amount of 1,000 rand. Right, this is what we're going to look up at what we did before in terms of the inventory systems. So you're going to look at how we're going to deal with that card in terms of why do we have to use the purchases and why do we have to use the inventory account. Right, so independent settlement discount received, then you're going to debit your purchases and then you're going to credit your trade and other payables. All right, so there's my little note in there where I said that you need to remember that the settlement discount received is deducted from the purchasing in determining the cost of purchases. So what they're saying is we have minus the 150,000 rand as 15% out of the 1,000 rand. We're going to have sundries in the current liabilities. There's quite a number of liabilities that to be mentioned. However, let's refer to the introduction part. So the introduction part is what I just told you about. Remember the list that had your trade and other payables, control account, your VAT, your bank overdraft, your short-term portion of their long-term loan installment, and so forth. Right. So at the end of the day, remember when you do in terms of the accounting cycle, you've got what's called the initial starting of the transaction. So the cycle starts from the transaction, you read, you understand it, and then what you do is you do the ledger accounts. After doing separate ledger accounts, then you do your journals. After doing the journals, I think you do your journals, which is you see the transactions, you do your journals, and then you do your ledger accounts, and then you do your trial balance, and then you prepare your financial statements and you move it to the managers for evaluation. And then after the evaluation there, you do your notes and motivates and stuff like that, and that'll be fine. So when you do your financial statements, we're talking about the disclosure. Disclosure, it means if you're dealing with incomes, in terms of the components of your financial statements, where do you record that? Okay, when you're dealing with expenses, when you're dealing with your equities, when you're dealing with your assets. So we passed that stage already. We know that incomes and expense form part of your income statement, and then your equities form part of your statement of changes in equity, and your assets and liabilities, they also form part of your statement of financial position. All the liabilities paid, all the liability payment that are within 12-month period are recorded in the statement of financial position as current, meaning all of those that are mentioned when I started. When you record them under the statement of financial position, you record them under your current liabilities, not non-current liabilities, rather. Okay, let me move on to this kind of an example. It says that the following balances were taken from the post-adjustment trial balance of Putin Limited as at the 31st of December 2021. Right. One of the things that is very interesting is just that you guys are no longer there, because I heard that you moved from writing an exam to being predicated by your assignments, and that's okay. But in terms of the framework, because you're gonna see this if you're going to continue with accounting in future. So how you write your heading is important. Like for example, when you write your income statement, you write my name and say Putin Limited in the first line. The second line will say statement of profit and loss and other comprehensive income for the year ended. However, when you write the balance sheet, you write the name, and then underneath you write balance sheet as at. The difference is for and as at. So you need to be very careful when you come to that, for those that they would be continuing with accounting. Right. Looking at our example, we've got our VAT control account with an amount of 2,200, and we've got our accrued interest on the loan. And then we've got our trade payables, we've got the income received in advance, and then we've got the bank overdraft. So the requirement says that you need to disclose the above transaction in the statement of financial position. Okay. I want us to actually do this question together just to check if you guys understand the statement of financial position, especially on that part of your liability part. So the required says, okay, this is what I was just referring to. You would say I'll show you the solution after. Put limited, and then you'll say statement of financial position. Financial position as at 31st of December. Sorry, 31st of December 2021. Okay, please work with me, guys. Please work with me. All right. First and foremost, I always take this, tell students that you need to know the approach, and by you knowing the approach, it means that you need to be aware of the framework. So if you know the approach and knowing the framework, there's no way you can go wrong with unless you do your calculations incorrectly. But if you know your framework, it means that you are well acquainted with your principles and procedures. Okay, somebody help me quickly. Who's got an idea on how can you approach this kind of an example? Interest on loan, and you're going to have the trade.
Oh, but payable. I'm actually looking. I think all of them they're actually liability, because even the income received in advance. I mean, the fact that it's received in advance, it will be recorded as a liability. So I'm assuming all of them they are a liability.
Okay, so that will include your VAT control.
Mm-hmm.
That would include. Do we have an accrued income there? Or it's an accrued interest, right?
It's an interest, yeah.
How many items do we have in there? Because some of the other parts, sorry.
5.
We've got 5. Okay, what do we have? We have.
I need to put them together. There's for VAT control, it's 2,200. And I'm trying to add them while I'm talking. And then accrued interest, it's 800.
Accrued interest is 800 rands.
Payables at 20 grand.
20 grand for trade and other payables. 20,000. Okay, the other one.
Income received 15 grand. Income received in advance.
And the other one.
Bank overdraft 22,650. Total, I'm getting 60,650.
Sorry, please, let's go back. Give me the total amount for the bank overdraft.
It's 22,650.
22,650. How much is the total?
I'm getting 60,650. 60 grand, 60,650.
1,650.
Yes.
Okay, let me applaud you for that because that's quite correct. Okay,
Yay.
So, sorry?
No, nothing, sorry.
That's okay. That's all right. So all of them, they do fall under your current liabilities, and then you just have to put them in order, or you can put them however you want it, as long as you get the right final amount. So all of these would fall under your current liabilities in the statement of financial position. Well, let me show you on how is it going to look like. So this is how it's going to look like when you prepare your statement of financial position, specifically for the liabilities part. Okay, so that means you guys are giving me the power to can proceed. Since well, you guys are not stuck with what I just showed you. Right, let's see. I'm going to move on further since well, we are comfortable with that part. But let's look at the trade and other pay. We are unpacking the trade and other payables control account, which it represents all the individual creditors in the creditors ledgers account. So what they're saying here is, if you are a company owner and then you subscribe to different creditors, you are going to have creditor 1 probably is Phuti, creditor 2 is probably Katlego, creditor 3 is Nicole, creditor 4 is so and so. So you need to open them like individually as they are. And then at the end of the day, you're going to open an account which is called the trade and other payables contract account, meaning that you're going to combine them, add them together, and make them what's called an opening balance under the trade and other payables control account. Okay, so I'm begging you, every time when you approach up with the trade and other payables control account, you need to think about it as the opposite of the trade and other receivables control account. What I'm trying to say is the trade and other receivable control account has a weight on the debit side. So the trade and other receivables control account is a much weighter on the credit side. So it's going to be the reverse. When you're doing the trade and other payables control account, it's going to be the reverse of your trade and other receivables control account. I would like to believe that that makes sense to you. So they must balance equally to their individual's creditors control account. That's when you do the T ledger accounts for each individual creditor. So what you do is you make the necessary adjustments where they are applicable, and then you balance it off, and then you transfer. They must balance equally to their individual creditors' balances when transfer takes place on a daily or on a monthly basis. So it depends on how you add or how you minus and all of those. So those are the kind of the necessary adjustments when you do the T accounts under the individual ledger account. But at the end of the day, you need to move it all together combined to your trade and other payables control account. Okay, let's move on to the posting procedure now. The process in terms of how you post the procedures. So your individual entries in the purchases journal. Okay, this is how it starts. When you purchase goods on credit, let's refresh our memory by going back to our learning unit or topic B. When you purchase goods on credit, you know that you're going to start by your first book prime of an entry. It will be your purchases journal. So it says that the individual entries in the purchases journal must be posted to the credit side of the personal creditors account in the trade payables ledger account. Remember, that's individual, it's not collective. So while the returns must be recorded on the debit side of the personal account of the creditors in the creditors ledger, the date the transaction took place, and the individual entries in the cash payments journal must be debited in the trade payables ledger on the same day the transaction took place. So you can see there's quite a number of movements in terms of the transaction that can be won. It depends on what you are required to do. So when you purchase goods on credit, it can move from single individual creditors entry account, ST, and it can also move to your purchases journal, and it can also move to your, actually I meant to say cash payment journal, and then you can move to your purchases journal and so forth, depending on what are you required to do. Well, let's look at the total creditors control column in the purchases journal must be posted to the credit side of the trade payables control account. This is well combined individually, while the returns must be posted to the debit side of the trade payables control account, and the totals of the creditors control account in the cash payments journal must be posted to the debit side of trade payables control account. But the first bulletin was dealing with the individual data in terms of the individual creditors on how you record that. So the second column deals with the movement of the consolidation of all of those list of creditors. You combine them and make them one to be under your trade payables control account. So looking at the entries that are made in the general journal that affect the creditors must be posted to the personal account of the creditors daily, and the creditors total column on a monthly basis to their control accounts. Okay, so if they don't fit to be recorded in anywhere else, that's where you create your general journal. Or if there are corrections that has to be made, we know the starting entry will be the general journal. Should an error occur when balancing the ledger and subsidiaries, the reason for any error must be identified and adjusted by the accountant, and the following errors could occur. So you guys, or those who are going to do the accounting, there's a lot of jobs that are waiting for you in the pipeline. So you need it for this kind of an error. Somebody in the firm is going to make an error. I know we are using the systems, but we do make a lot of errors as well. So you as the accountant means that you are going to be responsible to correct those kind of errors. So you're going to post towards your debit side instead of the credit side. That could be the error. So the transaction should be on the credit side, but you put it on the debit side. The correction must be made and you would move it to the right leg. Transposition of the figures. So my examples will be your 210 instead of 120 rands. It's highly possible as well. So you can incorrect the balancing or totaling or the listing. So your balancing figure could be wrong when you total it and then when you list it. So the error might occur in posting in the journals, to be posted to the ledger account. So it's possible that you can do the journal instead of the ledger account, or you can just enter things by the journal while the ledger is actually not prepared. So those are the kind of errors that you might experience when you do your trade and other payables control account as a T account. All right, let's have a look at this little example here. It says the following information relates to the records of Putin Limited in the 31st of December 2021. Cash payment journal, the transactions are trade payables control account, 20,000 rand. We've got a settlement discount received. Under the purchases journal, you've got your purchases returns journal with an amount of 2,000 rands. I'm going to work with you guys here. I just want to test if you guys do understand. Right, so your general journal, we've got the transfer of certain debit account transactions that took place towards the trade receivables ledger account from the trade payables ledger, 76 rands, my apologies. The list of the individual creditors per trade payables ledger. Let's have a look at that. Credit balance is 19,000. The debit balances. Let's look at the additional information. The following error was discovered as per the list of the individual balances creditors ledger during the process of the reconciliation in the trade payables control account. So you can see the error that I've just explained now. Now we are doing them in discovery at a practical level. The total list of creditors balance was overcosted by 200 rand, and the credit note number 221 for 50 rand was entered correctly in the purchases journal, but erroneously posted to the credit account of Sept. Total of the purchases journal was undercosted with an amount of 100 rand, and we've got a check for 90 rands paid to D-Stain that was entered on the debit side of D-Stain account. An invoice with an amount of 1303, which has been entered correctly in the purchase journal, was entered against the account of Keegan Dolly with an amount of 1330. The required part says trade payables control account, and then we need to do the reconciliation of the list of creditors balances with the trade payables control account. So our reconciliation is not purely only when you do your bank reconciliation. So you can also reconcile your trade and other receivables control account along with your payables control account. So my friends, you and I, we've got a question that we have to work on, and we have to work on it together. So this is what we're going to do. You and I, we're going to participate, and we're going to record the way you guys are giving me the answers, and then we'll look at what the solution says. Does that make sense? So I'm not going to do the T account, but I'm just going to say trade and other payables control account, and then I'm going to mention debit, that amount, credit, whatever the amount it is suitable for the credit. Okay, let me bring you on. Let me bring you up to speed. Who wants to take a shot? Okay, let me just give you an idea of what you're going to do. Basically, this is how you're going to do it. Let me go to a new page. This is what you are going to do. You're going to say trade and other payables control account. This is what we are doing, you and I, guys. So it means that you are working on that. Okay, you can come back, Taba. I've opened my trade and other payables control account. I'll show you guys what the solution, what you gave me is part of your solution. All right, Taba, you can come back. Mr. Mate.
Yeah, I still actually want to understand the question.
All right. So are you still looking at the question?
The transfer. Yeah.
All right. This is what I'm going to do now. I'm going to read the questions, and then you tell me where do I put the amount under the trade and other people should it fit. I think that will be fair enough, because I'm not sure how long are you going to take on your side to conclude reading the question. So, but I'm going to give you, I'm going to read what I see in here, and then you will tell me debit credit is what under the trade and other payables control account. Makes sense, right?
Okay.
Right, we've got the cash payment journal transactions here. We've got trade payables control column with an amount of 20,000 rand. What do we do with it, Tabang? I'm going to start recording now.
With the trade payables account, I think you'll have to actually. Pardon?
Yes, this line item under the cash payment journal transactions, the trade payables column, what do we do with it? It's an amount of 20,000 rands.
I think you'll have to actually debit the.
Okay.
Yeah.
But I'm gonna debit that as what?
As purchases and returns.
Yes.
Purchases and returns.
This is the returns with an amount of 20,000 rands. Okay, Tawang says that we have to debit the first amount as purchases returns under the trade and other payables control account. Is there any objections? Is there anybody with with an idea? Otherwise, I'm going to move forward and then we'll correct that as time goes by.
Sir, can I ask?
Yes.
Are we not supposed to check if there are any adjustments on the trade payables column for the CPJ before we move it to the ledger?
I'm not sure if I do follow you. Sorry, who am I speaking with?
It's Pearl.
Okay. Pearl, can I put you on pause just for a moment? I just want to get back to Taban. I just want to clarify something. I'll get back to you just now. Sorry, Taban, please get back on. I just want to clarify something with you. Mr. Mate?
Oh, yeah.
All right, so the amount you referred me to, is it 2,000 or is it 20,000?
It's actually 2,000.
2,000 rands.
Yeah.
Okay, then what do we do with the 20,000 rands?
The 20,000 rands, I think you'll have to actually credit it.
Credit that as
in
what?
the trade payables. In the trade payables.
Payables control, right?
Yes.
Okay, so you're going to credit that as what?
You'll actually credit it as our creditors trade payables, because
Okay.
that's the money that we actually receive. Yeah.
The money that we have. Fine. I put the 20,000 on the credit side as you said. Okay, sorry. Sorry, I forgot your name, my sister. Thank you so much, Tabang, for that. All right, somebody was talking before I was rectifying this error with Tabang. Sorry, please come forward. You were asking something?
Sir, I was asking if are we not supposed to check if there are any adjustments to the CPJ, the 20,000 rand?
So what you're saying is we have to open, so we have to put the CJ somewhere under the trade and other payables control account and put the amount in an open brackets and adjust it. Is that what you're saying?
Yeah, I was asking if that is the correct way of doing it.
Not quite exactly, but you can adjust if there are adjustments. But do you think there are any items that we have to adjust in what you say?
I'm not sure. Is there anything on the additional information given?
Okay. Can I go back to the additional information?
Yes, sir.
All right. Let me go for you, Pearl. All right, this is your additional information. Can you see it?
Yes, I can see it.
All right. All right, let me read it for you and then it will tell me if these qualifies to be adjusted. It says that the following errors was discovered as per the list of the individual balances creditors ledger during the process of the reconciliation in the trade payables control account. Okay, bulletin 1 says that the total list of creditors were overcasted with an amount of 200 rand. So, Pearl, what do you think about this one?
I'm not sure if it affects the CPJ, but it reduces our trade payables amount. Yes, our trade payables by 200 rand.
On which side of the leg do you reduce your trade payables control account?
On the debit side.
All right. So would you mind if I can say overcast on the debit side with an amount of 200?
Yes, sir.
It makes sense.
It makes sense.
Is that we have to reduce the overcast. So we have to reduce the trade and other payable by the overcast with an amount of 200 rand. That will go to the debit side, as you said. So I'm going to read further for you, and then you will tell me again, pal. Is it fine?
Okay, sir.
Well, we've got a credit note number 221 for 50 rand that was entered correctly in the purchases journal, but erroneously posted to the credit account of DC. What do you think we have to do about this?
I think we subtract the 50 rand from the credit from Siboko D, I think.
Specifically from Siboko.
Yeah, because it was.
Yep. Okay, please go ahead. Sorry for my interventions.
Okay, on the credit account, right, of Siboko D,
Yes.
which would be, is it correct to say it would be our creditor's ledger?
I think so, yeah. I don't want to confirm, but I think so. Actually, I just want to follow what your thoughts are. So what you're saying to me now is it doesn't form part of your trade payables control account, but it forms part of the individual creditor's ledger. Is that what you're saying?
Yes, sir.
Okay. Then does it qualify to be a reconciling item?
I think so.
Okay. So this is what I'm going to do now. I'm just going to say recon. Just going to say recon. And you say G7, right?
Yes.
Okay. Debit or credit?
We are going to debit.
Going to debit that.
Yes.
Okay. Debit. So you say incorrect posting. Correct posting. Okay, I'm going to go back to the questions again. Are you comfortable, pal? Can I move on?
Yes, sir.
Okay, no problem. So bulletin 3 says total of the purchases journal was undercosted by an amount of 100 rand. Pal, you want to take a shot on this one as well? Can I pick some? Okay. What do I do about it?
Doesn't this affect our creditors again?
So is it the individual creditors or is it the trade and other payables control account?
I think trade and other payables account.
Trade and other payables control account. All right, now that's fine. Right, I've got one more for you here. We've got a check of 90 Rand paid to D-Stain was entered on the debit side of D-Stain. What do you think we do about this one? What do you think we do about this one?
This one affects our CPJ.
CPJ.
Yes.
Okay, and then how do we record this?
It's do we say D-Stain 90 Rand?
D-Stain 90 Rand, yes, where?
On the CPJ.
No, but we're not allowed to do the CPJ. We're not required to do the CPJ.
Oh, okay.
It's only the trade and other payables controller and the recon.
So this still affects our creditors ledger.
So it goes through the creditors. Okay, give me the process. Debit, credit?
On the debit, since we are paying.
Okay, so when you say the creditors ledger, it means what I'm going to do is I'm going to use the reconciliation.
Yes.
Okay, so we do that as what? We record that as what?
It will be. I'm not sure if I really get this one because it says a check of 90 Rand paid to D-Stain was entered on the debit side of D-Stain account. This means it wasn't recorded.
Actually, it was recorded, but incorrectly. That's what they say. It's the same as, let's say I owe you and I pay you. Instead of putting that amount, instead of increasing your bank, you decrease it, you put it on the credit side. I don't know if I'm making sense.
I'm still not clear, sir.
Okay, no, it's fine. No, it's okay. Do you want to finish the last one, or do you want me to pick somebody? Let's give the other kids a chance, right?
Yes, sure.
Okay. But Pal, thank you so much for your participation. I was looking for, this person is gone. I wanted this person to actually can participate, but the person is gone. Anyway, oh no, he's here. Mr. Malaudi, Jacob, I've been looking for you, man. Can you take over?
Thank you, Mr. Miso.
Thank you. Hi, how are you?
I'm finding you.
Well, thanks.
Sorry, man. For the first time, I know that you are looking for me, and I was having a challenge. I was having a challenge with my laptop, so accidentally somebody took it, so I got the new one. So I think it was a good cause.
Okay.
Yes. We are on. You want me to help with which one?
No, you can. Okay, we were on the check part. Actually, the last two bulletins.
The last two bulletins.
Mm-hmm.
The check part of for 90 rand, which has been paid by this day. I think that one we can minus it on the bank, on the credit side.
But we're not allowed to do the bank. We have to do the reconciliation and the trade payables control account.
Okay. The trade rate. Okay. We can subtract on the purchase.
On the
purchase, that was the amount.
All right, let me ask you this way. Do you think it goes under the trade payables control account, or do you think it goes under the reconciliation?
Trade payable control account.
Okay. Is it going to go on the debit, or is it going to go on the credit?
On the credit side.
Okay, then I'm going to go to my trade and other payables control account, and then I put it on the debit side, as you're saying. Can I just say disdain on the credit side? Disdain. Disdain. Please give me the amount again.
The 90 rands, yes.
All right. Okay, let's have a look at the last one, the last bulletin. Let's see what the last bulletin says. The last bulletin says an invoice for 1303, which has been entered correctly in the purchases journal, was entered against the account of Kick and Dolly with an amount of 1330. You remember that the dispositioning of the figure? Yeah, it relates to this one. So what is your take on this one? Whatever that comes in your mind is okay. Whatever that you think is correct, that's okay. Now the thing is, the reason why I'm asking you this individual is because I need to know where you are in terms of the understanding of this whole thing. I don't do it for the sake of doing it. I need to understand, because the nice part is you guys are quite small in the number, so know the weaknesses and the strongest of each and every one of you.
Yes, that's true.
Yes.
I think this one we need to put it on the debit side of the cash.
The trade and other payables control account.
Yes.
Okay. Then we're gonna. Okay. Let me just. The interesting part is I'm gonna just say prepositioning is fine. So how much will be the amount?
The amount, the difference is, I think it's gonna be 27 rand.
27. So 1330 and 1303, I think is okay. Let me just say 1330 minus 133. Okay, cool. All right, let's go back. I think we are done with the additional info notes. We can go back here. Well, Tawan gave me the trade and other payables control account as well as the returns. So we've got a settlement discount received. Let me see where I can pick here, because these we might as well try to record that. Nicole, do you want to take a shot here? You were so excellent in the depreciation the last week. And let me bring you on this one as well.
How do I say which side it should go into on the purchases returns journal? Is that what we're doing?
No, we're doing the settlement discount received.
Oh.
But we are required to do the payables control account along with the reconciliation.
So if it's received, does it go to the credit side?
On the credit side.
No.
I beg your pardon?
Yeah, I think it goes on the credit side.
Of the trade and other payables control account.
Yes.
Okay. So Nicole says that this figure goes to the credit side as, let me just try to think of the word, settlement discount received. Amount received. Give me that amount again, please.
500.
500 Rand. Okay, thank you very much. And then we're going to move on to the next one. Okay, we've got account under the general journal there. They need to be recorded, I think. So such the transfer of certain debit accounts transaction took place towards the trade receivables ledger, the trade payables ledger account with an amount of 76 Rands. Anybody quickly who can have an idea? What do we do with this? Come on, we just left with 2 transactions here. Let me see if I can pick anybody. Elizabeth Mate, I think you just need to know Tabang. You might be a brother and sister. Elizabeth, please come to the picture.
I'm sorry, sir. I think I'm
sorry.
on the wrong side. It should go into the debit side.
Is it on the debit side? It's fine.
Yeah.
I can do that for you. Okay, Nicole is changing her mind. She says the debit. Okay, but just at that. Okay, let's see what Elizabeth has in store for us. Hi, Elizabeth. Oh, Matapelo, you're back. I can see you had a problem with, I think it's the network. Welcome back.
No, Puti, it's not the network per se. I was assisting my tenant with the child. The child was choking, so I think I'm still distracted, and I missed a couple of things because I had to run outside and help her. So I'm not really sure. I'm trying to catch up because the last I was in the session, I think it was Pearl who was taking you through the adjustments. Yeah, so I'm not really sure. I'm trying to catch up, but I'm not even following. I think I'm still shocked. I'm trying to, settle down.
No problem. Okay. Oh, no problem. Sorry about that. Okay, Elizabeth, I'm going to move on to you now. Do you have anything that you might think of? Okay, Elizabeth, I think she still needs to settle as well. Let's see. Puseleto, Musina. Hi, Puseleto. Can I bring you up to speed?
Yes, where are we now? I'm sorry. I
Okay,
got disconnected.
Oh.
Are we on purchases returns?
Sorry?
Are we on purchases returns?
No, we want the general journal.
We're on general journal.
Yes.
Which point are we on? I just got disconnected, so I need to also.
Okay, no problem. So we are on the first point, the transfer of certain debit accounts transactions took place towards the trade receivables ledger from the trade payables ledger with an amount of 676 Rands.
Say that again.
the first bulletin says that the transfer of certain debit accounts transaction took place towards the trade receivables ledger from the trade payables ledger. The amount is 76 pence. So my question was, in terms of what we are required to do, where do you think this can fit in?
So we're supposed to transfer this either to the trade receivable or trade payable.
We have to, it's either it's going to form part of your trade and other payables control account, or it's going to be forming part of the recon.
Isn't the recon is when the company is fixing the amount?
Okay.
Like it's the extension of the bank statement, right?
Okay.
Am I right to start there?
Not quite exactly, but I think I would appreciate if you can tell me on how do I record it under the recon. I think you're right by saying that it goes under the recon, but the substantiation as to why is it going there, I think that's where you're losing it. Yeah. So I'm going to put it on the recon as what? Okay, let me just say the transfer of certain debit account. Will it be fine?
I was gonna get him back.
Sorry?
I got disconnected again.
Oh, sorry about that. Okay, maybe you can just go ahead. I think I've disturbed you there. Oh, I think we've lost her again.
Sorry, Puti, if I may jump in.
Please come. Please come in.
I don't know. I think you need to record it under trade payables.
The trade payables control account.
Yes.
Okay, let me just do that. Matabello is saying that we have to, okay, debit credit, Matabello.
It should be credited because transfer of certain debit accounts transaction took place towards the trade receivable ledger fund. Yeah, it should be credited.
Okay. Matabello, as I was with you, sorry, come again, please.
Now I was saying because it's a transfer and it is for trade payables, it needs to go on the credit side.
Okay, under the trade and other payables control account.
Yes.
Okay, I'm just going to record that as the transfer. Please give me that amount.
76 rand.
26 rands.
Uh-huh.
Okay, now I'm going to record that. Is that credit? The
Credit.
transfer. Okay. So, okay, again, let's go to the last one. So it says that the list of the individual creditors per trade payables ledger. So we've got the credit balances with an amount of 19,000 rands. What do you think we have to do there?
I think that one, it needs some adjustments to be done, because when you look at the additional information there, I think there's total list of creditors balances was overcasted, ne?
Yes.
And by 200. So we would need to deduct 200 from that 19,000. And I think it's going to give us 18,800. And it should go on the credit balance, creditors. It should go on the trade payables as well, because it's the creditors account. Yeah, trade payables.
Which side? Debit or credit?
Debit. I would put it on debit side.
Okay. Then it's going to be a debit as
18.8.
Okay, let's see. So you're going to, you can't minus it automatically, but remember when you move to the debit or credit, automatically it means that it's a, when you put figures on the debit side, it means that you're automatically adjusting the credit side. The same principle would apply. If you put figures on the credit side, it means automatically you're adjusting your debit side. Okay. So it can't be 18,800, it has to be 19,000 rands. I don't know if I'm making sense.
I hear you.
Okay, so I'll put that as, let me just see, again, just a moment. The credit balance. Credit balance. with an amount of 19,000 rand. All right. Thank you so much for taking part on this question, but I'd like to know from you who feels that there must be some sort of a correction on what we have just did now. Do you think there are corrections that has to be done? Any view? All right, let me come to help you on this one. The only error that I made here in making this question is by having my debit balance. So I'll just assume that it's any figure in there. All right, when you're approached with this kind of a question in the exam, they would want you to do what's called the trade and other payables control account, or they would ask you to do what's called the individual creditors ledger accounts, or they want you to reconcile whatever the error that might have occurred on that one. So first and foremost, when you're dealing with the trade and other payables control account, you know that it's a liability, and liabilities by the standards, they do increase on the credit side. So any figure that favors the liabilities is going to go to your credit side. So meaning that you just need to open your mind towards your credit leg because it has much more weight than the debit leg. And then secondly, you need to identify as to, okay, identifying meaning that you have to talk to your transactions. Okay, there's a payment from the client. That means that there's a reduction on the outstanding amount that we have. But how can that affect what is outstanding? So the reduction will be on the debit side because it has much control on the credit side as the trade and other payables control account, meaning that any effects on the credit side would be going to your debit side, or any reduction, any possible reduction will just come to the debit side. So the same would apply to when we're doing the trade and other payables, trade and other receivables control account. Okay, so it has much more weight on the debit side than on the credit side. So any effect in terms of the reduction will come to the credit side. So that's what I've been speaking about in terms of the reverse possibility. Okay, looking at, I'm just going to discuss it one by one, or just a bit by bit. Looking at the examples in here, we've got a CPJ transactions and we've got a trade and other payables column. So what they're telling you about is we've got a total of 20,000 rand under the CPJ, but the column will be the creditor's control, meaning that you are going to have 20,000 rand and on the credit side of your trade and other payables control account. So you're going to have it like this. So when you I think this one was given by Tabang. He said that we have to credit creditors with an amount of 20,000 rand. You were quite okay on this one. So, but what you can just do usually, you just say credit and then you say balance brought down, or you can just say opening balance. It's going to come up to the credit side. Okay, let's have a look at the other one. Okay, this was done by Nicole, settlement discount received. She was quite correct by saying that it has to be on the debit side. Remember, when you receive the settlement based on 20,000 rand as part of the settlement, it will have an effect on the debit side because it has to be reduced by 500 rand. So meaning that 20,000 minus 500 rand will be the total opening balance on the credit side. But we don't work it that way. What you do, you just say debit, the settlement discount received under your trade and other payables control account. Right, I think this one was tackled by Tabang as well, purchases journal. So we've got the returns with an amount of 20,000 rand, and he said that it has to be debited with an amount of 3,000 rand. That's quite special for you, Tabang. That's quite correct. You just have to debit this under your trade and other payables control accounts. So you did quite well on that one. All right, let's move on to the errors, the general journal. So we've got a transfer of certain debit amount that takes place towards the trade receivables ledger accounts from the trade payables the trade payables ledger accounts with an amount of 76 rands. So this was you, Matapelo, right?
Yes.
This was you, right?
Yes, it is me, Pretty.
Okay, not bad. So unfortunately, this one, it doesn't go through to your trade and other payables control account. It will go under the reconciliation account. So meaning that when you do your recon, you have to put this under the recon account. Right. So actually you tackled our general, all of them. So including the list of the individual creditors per trade payables ledger accounts with a credit balance of 19,000 rand. So these would go under your recon as well as 19,000, but it will be your opening balance. Matapelo, are you happy there?
Yes, I get you.
Okay, so these are certain errors that you've encountered on. So I think you'll be able to learn from that one. So my reference to you and everybody in the class, please make sure that you go to your study guide and have a look at, let me just check on page I'm using the all study guide, but mine is from page 270, 271, 272, 273, 274, 275, and yeah, 275 I think is the last page with regards to the trade and other payables control account. Right, let's look at the errors that was discovered. Please make sure that you go there, or you can just go to the learning unit for trade and other payables control account. So it says that the following error was discovered as per the list of the individual balances, creditors ledgers during the process of the reconciliation in the trade payables control account. So you get the total list of the creditors balance was overcasted by an amount of 200 rand. So I can't remember who gave me solution on this one, but this person did well. So the overcasting meaning that it has to be on the debit side with an amount of 200 rand. So you're going to move on this figure under your trade and other payables control account on the debit side. Make sense? Are you guys happy? Right, I'm going to move on to the next one, which says credit note number 221 with an amount of 50 rand was entered correctly in the purchases journal. So immediately when they tell you that it was entered correctly under your purchases journal, it means you are done with the trade and other payables control account. The only thing you need to look at, where can I rectify this error? But erroneously posted to the credit account of DCO. It's an individual creditor, so obviously it will go under your recon. Right? So the standard with regards to the error, it says that you need to rectify the error first before you can move it to the right or the correct link. Okay. So the total of the purchases journal was undercasted with an amount of 100 rand. So that's going to go the opposite of the overcast. It means that opening balance has been undercasted, so you have to add 100 rand on the credit side. Okay. So the next one is a check with an amount of 90 rand paid to D-Stain was entered on the debit side of D-Stain account. So this one we have discovered that is what? I think this one is a recon as well. Let me see. It's an individual transaction account. While the last one with an invoice of 1303, which has been entered correctly in the purchases journal, was entered against the account of Kikidoli with an amount of 1330. I think Mr. Malauzi tackled this one. I think I remember him giving us the difference of 72 rands. Okay, so apparently that's not the trade and other payables control account. It's a recon account, but you just have to minus it. You just say 1330 minus 1303, and then you put it under your recon account. So for further reference on this one here, unless if you want me to send you the notes, I can do that. You can just go to all of those pages and see on how do they record them, but try to make an understanding on how are they recording that. I think it will give you an idea as to how you can go forward with regards to that. Okay, I'd like everybody else to unmute yourself. Please unmute yourself. It's not going to be questions. It's not going to be questions in the book. It's just questions, the conversation in between us. All right, where are you experiencing some difficulties? Not on this one only, but there, get the content there. When you recall quite correctly, do you have, because we're gonna go back to topic B. I know Norman is not here. He's the one who emphasized that we must go back to topic B. I'll go there because it will also help you as part of the class. So from topic A, where are you guys experiencing some difficulties? So anybody can just move forward and tell me you are doing this, you're having a problem. So remember topic A, is the introductions that dealing with the accounting cycles and stuff like that. So anybody on topic A? Okay, if you're not having any problems on the topic A, then it's fine. You can email me when you realize that you've got a problem with topic A. Topic B, where are we experiencing some difficulties?
On the adjustments.
On the adjustments, okay.
Unit 6.
Unit 6, okay. No, that's fine. Is it Pell?
Yes, sir.
All right, thank you very much. And any other part? Who is having some problem on topic B?
Same to me here. Adjustments.
Adjustments are giving you a bit of a problem as well. We'll get to that one. So everybody else is actually having a problem with the adjustments. Let's move on to topic C. Okay, let me see on my study guide what topic C is. Topic B,
I think it's depreciation.
Depreciation. Well, we did it last week, but we'll go back to it as it goes on with the future. And topic C is the depreciation. And topic D, are you guys fine, or do you still need more time to emphasize yourself on the trade and other payables control account? You must be fine, right?
So I get confused by credit losses.
Sorry. Okay, somebody was saying?
I wanted to say that maybe on topic D, I just need one to practice a lot. Maybe we'll get it right.
And the current liabilities, right?
I was saying by credit losses, I get confused.
Okay. Credit losses is giving you a problem as well. We'll deal with that. That's trade and other payables. Sorry, this is the trade and other receivables control account.
Yeah.
Okay. So you guys are, so those are the problems that you guys are encountering.
Kuti, if I may come in there, I think some of people like myself who is doing accounting for the first time, it also very tricky because you don't even know how to name your accounts or how to even allocate what items under which account. So that alone, it's a bit tricky and very difficult. So it makes it more difficult to even know where to record whether it's debit or credit because you struggle to even name them. Okay. So I think that alone, it just gives me a headache, but I'm putting my mind on it. I'm working on it.
Hello.
Okay, I'll come to you. Let me just answer Matapelo. What I will do on that one for you, I think the problem is because obviously you have to cram or know some of the concepts. All right. So, but the bigger issue would be the recording part of it. That's where you have to apply your double entry systems or your accounting equations and stuff like that. Or that's where you have to follow the principles. Why are you debiting this? Why are you creating this? Why are you reducing this? Why are you adding this? All of those. So that will lead us back to topic A, which is fine. We still have more time. We'll go back to it and do it again. We'll redo that. And obviously I'll be guiding or leading you in terms of, okay, I'm debiting this simply because of the reason behind this. And I'm crediting this, and these might be the reasons. So that I can deal with. I don't have a problem with that. But I think it's going to be your responsibility to know the concept like your depreciation, credit losses, and all of those. Okay? But that can be my responsibility in terms of that I can take the fall for it. It's okay.
All right. Okay, thanks for that, Kuti. Thanks.
No problem. So somebody was saying, I think I stopped you. You can go ahead, please.
Well, with me, it's almost the same with Matapelo, but the issue is when you start understanding the theory, applying the practical becomes very tricky, you know?
Is it?
Yes, because now it's like, what statement should you learn better than the other? Is it general journal? Is it the general ledger? Or is it the comprehensive income and others, you know? So after that, then it's where does this come from? And then, you know, I think that's the issue. If it's the first time, it's just understanding the statements and how you plan it out, because some statements they have like a column where they say there's folio, then you're like, okay, but the other one on the theory, they didn't emphasize on folio, they only emphasized on the double entry as to this with your right hand side and your left hand side with the credit, it's a plus, a minus, and the basic accounting equation. Yeah, so it's just when you try to figure that out, and then after the practicals are just like they come with different terms. Like now you have to learn what is overcasted because you just learned accrued income, or you know, so it's kind of tricky there, I guess, for me.
Okay, but Bella, don't you think you are probably pressurized over time to understand the principle of because the reality is you're going to be faced up with different concept as you go along because it's part of growth. You cannot but that shouldn't confuse you in the sense that if you have learned your basics before, then you wouldn't have a problem. Because what I'm trying to say about the basics is if you know, okay, speaking of the debit and the credit, if you know that your assets and your expenses are increasing on the debit side and they decrease on the credit side, that's a principle on its own. That's why I told that sorry about that. That's why I told Matabelo that I think it's going to be your responsibility to know whether credit loss is an expense or not. You understand? But it is my responsibility to say, okay, all the expenses, they increase on the debit side, they decrease on the credit side. And all incomes and the liabilities and the equity, they increase on the credit side, sorry, on the credit side and decrease on the debit side.
So that, yeah, that thing I wanted to ask, we don't touch on VAT. Input VAT, output VAT, all of that.
Okay, no, I have to note that one down. We'll have to go back to it.
Oh, okay, cool.
We'll have to go back to it. Okay, this is part of the plan going forward because we left the topic C, right? I'm just going to cover the theoretical part of the topic C. Sorry, topic E. My apologies, rather. So obviously, I'm going to work on topic C with you, and the reason I'm asking you is to what are your encounters on what we did previously, because I need to know them down so that I should revisit them for you. Do you get what I'm saying? If you complain about that, we have to tackle that. If you complain about double entry, we have to go back to double entry. If you're complaining about the adjustments, we have to go back to adjustments. If you're complaining about the closing procedures, we have to go to the closing procedures to make sure that everybody else is actually covered. If you're complaining about depreciation, we'll do more questions on depreciation and see on how do they tackle them. Does that make sense?
Yes, it does, Puti. Thanks.
Yeah, no problem. Okay, I'm just gonna go back to topic. I think it's topic. Let me just take my stuff. My statement is topic B, where we are dealing with the adjustments and all of those. Okay, so I've developed a lot of small summaries here, but I don't know where did that happen because it's just lost now. But I'm just gonna guide you through your study guide and I'll be able to explain what is what. And due to time, I think whatever that we've covered, we will be covered that, and then we'll continue with that the next week. Right. So I need you guys to go to page 57 of your study guide. Right. You can all put yourself on mute. You can mute yourself. It's fine. Right, just a moment. page 65, sorry, 57. All right, page 57 deals with topic B, where we collect and process the accounting data in terms of the entities. All right, and this is where we've learned about, I think I made a mistake, sorry, just a moment. I wanted to do, all right, let's go to page 98, sorry. Right, 98 deals with the adjustments. I think most of you had a problem, or you had a problem with the adjustments as well. All right, page 98 deals with the adjustments, and the adjustments deals with certain accounts that has to be adjusted. Not every account has to be adjusted. The accounts that has to be adjusted include your prepayments, your accrued, or the income received in advance, or the accrued incomes, as well as the accrued expenditures, credit losses, depreciations, and so forth, and stuff like that. Okay, let me just have a look at that. So, but I think if I remember quite well, you started with me from the beginning. I gave you this kind of a questions that we have to deal with in the question, in the what is it, in one of the classes that I shared with you. Who started with me before? Who started with me when the class was initiated? So none of you started with me. You came in late.
I only joined, I think, on the second class. No, I didn't start like from the beginning.
Okay, but when I did the adjustments, were you in the class?
Yes, I think I was.
Okay.
Yeah, I was.
Nicole, I think you started with me as well.
Yes, I could start with it, but I just don't recall adjustments because I know I missed a period because
That was a period that you missed.
Yeah.
Okay. Okay. I think I have to develop quite a big number of questions in terms of the adjustments for you. That will probably be next week. Let's see something. I'm not going to touch base on those accrued incomes here, but I'm just going to go through. Actually, I wanted us to have a look at what's called the inventory systems and the markups on the selling price and the cost. That's what I wanted to ask you. Have a look at. Just a moment. All right. The closing of procedure, where you determine the profit of an entity and preparations of statement. Okay, I'm just going to touch base on the theory there, and then we'll just leave things as they are. Then next week we'll do the adjustments, and we'll do practical questions on the closing procedures as well. Okay, let's see. Let's go to page 118. I just want to give you the basics. Page 118, please. All right, page 118 is from the learning unit 7, which deals with the closing of procedure, and you determine your profit of the entity and the preparations of your financial statements. All right, determining the profit of the entity, which would be the first part. This is how you derive on that one. There's only 3 ways of dealing with it. You get to calculate how much your sales is, and then you get to calculate how much your cost of sales is, and then it's going to give you the gross profit, it's going to give you the gross loss. And then you deduct all the relevant expenses in the current financial period, and then you get your net profit. And with your content, that's how far you get. We don't do tax. There's no deferred tax. There's no income tax. That's how far you get. You understand? So there's a different way of calculating your profit, which they can also ask you in a multiple choice exam or multiple choice assignment. So instead of doing it in the normal format that we know when you do the income statement, you can also derive at your gross profit or gross loss via the trading account. Sorry about that. So you can calculate your gross profit or gross loss by doing the T account, which is called the trading account. And then if you want to determine your profit or loss, you can do it via, the profit or loss of the year. You can do the T account on the profit and loss account. However, under the trading account, you're going to have your sales on the debit side, and then you're going to have your cost of sales on the credit side. and then you're going to have the difference in terms of your gross profit or the gross loss, and you're done with your trading account. And then on the profit and loss, you're going to move that profit or the loss, and then you're going to put it under your T accounts, where you're going to have your expenses on the credit side, and then you're going to have your gross profit or the gross loss on the debit side, and then you determine the profit. Okay, so the sequence would work in that way, but at the end of the day, you have to prepare what's called the financial statement for a sole trader, meaning that the information or the adjustments that you made there in terms of the closing procedure, at the end of the day, they have to be transferred through to your financial statements, and then you're going to disclose them as they are. Okay, so the other thing that I want us to tackle today is the inventory system, which is the trading inventory. So there, obviously, it's going to depend on the nature of the business or the type of the business that you are in. But we've got two types of the inventory systems, which is the perpetual. It deals with the continuous. And we've got the periodic inventory system. Make sure that you grasp that, even though we like the periodic, we like to comply with the periodic inventory systems in here. But in terms of the perpetual inventory system, we keep a continuous tracks of inventory levels for the different inventory items that we sell. And then how do we do that? We use the scanners and we use the barcodes. So this is what happens when you go to Pick n Pay and then you buy your groceries. The merchandise that you buy on the shelf is already recorded under the perpetual inventory system of Pick n Pay, meaning that because they need to keep track of that. All right. So what they normally do is they do weekly records in terms of, okay, how many, they do weekly counts or monthly counts or whatever the termly counts. They're going to look at, out of what we have bought, how many stock are we left with? Remember, that's part of your inventory. Okay, so as soon as you put your goods on the tiers and they step out of the fan, then that means there's a sale of the goods. We no longer
Mute yourself, please.
No. Thank you, Puse. Let's carry on. All right, you need to go in terms of the reading about your method. You need to actually go to your page 119. They would give you the process in terms of, okay, when you buy, what is debited. I think this is what most of you who are new on the accounting, you're struggling with in terms of, okay, which one to debit and which one to credit. Why am I debiting? Why am I crediting? So to further your understanding, if you go to page 119, it'll tell you on the pages of inventory. The inventory will just go up, but it will depend on how you buy your inventory. If you buy the inventory, obviously it's an asset, it will increase on the debit side, and then the bank will also be affected if it was purchased by cash. And then if you are buying inventory on credit, then that's where you will get to the trade and other payables control account, but the inventory will still remain. So the entire process in terms of the purchase under the perpetual inventory system, it works. It's more developed on page 119 of your study guide. Right, so in terms of the perpetual inventory system, the cost of sales is not determined when every sales transaction takes place. However, the inventory with the cost value of the asset has to be determined. So we're not going to have the purchases or the purchases returns. Or let me rather say, it says no purchases or purchase returns accounts record are kept. So you have to go further in terms of reading on that one. And the physical inventory count will only be disclosed shortages or the surplus of inventory. But the yearly inventory count is actually quite important for the perpetual inventory system. Okay, so let's have a look at I just want to explain the markups in here. So when the retail company or the company buy goods, they buy them at cost, right? So they need to determine what's called the selling price. So they're going to have a policy or a methodology that they're going to use in order to add up towards the cost of the goods that they purchase. So we usually call them the markup or the markup cost, right? Meaning that if you buy, let's say you buy 1,002 kgs of Omo, and then obviously you determine the single price for each, which would say, okay, 2 kgs about 35 Rand, and then the markup on this 35 Rand for us to make profit will be, let's say, 25%. So what you do is you take the cost for each individual Omo, and then you mark up the 25% for each or collectively, and then they're going to give you how much of the selling price would be. So the selling price is something that you bring in terms of, you know that you have to pay the rent, you have to pay the salaries, you have to pay a lot of things like water and electricity and all of those. So you're going to make that at the end of the day, you'd be okay, my net out of my cost and markup, I'm left with 5 Rand. So 5 Rand will form part of the company's revenue. Obviously, you're going to deal with the issue of the tax and everything later on. Okay, so accounting tells us that I've explained the markup on cost to determine the selling price. And then if you've got the selling price, then you need to determine the markup, meaning that you need to go in reverse. Okay, so you go back, you'd say, my selling price is always at 100%. Then my markup on the selling price, in order for me to get to the original cost, you have to minus the markup so that you'll be able to be left with the original cost. So that's how it works in terms of the movements when it comes to your markups. Okay, so don't worry about that. I'll develop a lot of questions, and then we'll deal with that one later on when we are dealing with the markup specifically. So I've explained the trading account, I've explained the profit and loss account, and I've explained the issue of the cost of sales as well. So I'm going to bring you up to speed with regards to the periodic inventory system, which says that under the periodic inventory system, the purchase of inventory is not recorded under the inventory account. Meaning that when the question comes up and they say you need to comply with the inventory systems, sorry, periodic inventory system, you forget about the inventory account being open. What you have to think about is the purchases. Okay, so the inventory account will only be recorded when you're dealing with the perpetual inventory system. But under the periodic inventory system, instead of having the inventory account, we have what's called the purchases account. Why? So under the purchases account, you know, when goods are purchased, sometimes due to the defects, you take them back. So you might experience what's called the purchases returns, and then you have to deal with that. Okay, so those are the encounters that you would have under your periodic inventory system, along with your perpetual inventory system. Okay, then we'd move to note number 3. It says that as a result of the above procedure, it should be clear that the periodic inventory system, the cost of sales, we don't determine the cost of sales under the periodic inventory system at the time the recording of sales take place. The cost of sales can only be determined at the end of the financial period when the inventory count is taking place. Okay, at this point in time, I assume you guys know the process of calculating the cost of sales. You know the process of my opening inventory, my purchase, and the carriages, and then you minus your closing inventory. There will also still remain the same process when you calculate your the cost of sales. Okay, and then from there, you know that your sales minus your cost of sales, you get your gross profit or you get your gross loss. So that part has been sorted out. However, you just need to know which method am I complying with. Okay, so there's a difference in terms of how you deal with the accounting process in accordance with each single method of the inventory system. So because when you deal with certain methods, we don't comply with certain type of an account to be open, like the inventory account, we know that it goes under your perpetual, and then the purchases will go under the periodic inventory system. So to feed your information as part of your knowledge growth, please go to page 124 and you'll be able to see what is what afterwards. So you will see the compliance. But when you're dealing with that part, make sure that your mind is actually on the inventory account being open as to which kind of method are we using, or it should be on the purchases account, depending on what type of the inventory method are we using, because that's what is going to make a bit of a difference when it comes to that part. Okay, so I'm not sure, but I think most of you might have experienced this kind of a method when you were dealing with the previous assignments, the multiple choice assignment. Do you guys, by the way, have assignment that is due, or are you done? Let me bring you Matapen.
I think we left with 2. There's one that is due now, I think Wednesday, and then another one around October. So yeah, it's about 2 that we left with.
Okay. My advice to you guys is make sure that you do your assignment with a anyway activity assignment. Since I had rumors that you guys are not writing the exam, so you can't bank on the exam for you to pass. You have to bank on the assignments. So make sure that you sit down, do your assignments, ask questions where it's necessary. You're gonna get assisted, so that you'll be able to, when they do whatever that they do, the average and all of those, then you will be sorted.
Putty, can I just ask a question?
Yes.
What's the difference between fried out and then fried in? Can I add those? Which one goes to profit and or loss when you're doing a T account?
The fried out, it means that is the move out of the goods, and the fried in is going to be the moving of the goods. I don't think that would form part of your P&L account unless if you are doing the cost of sales calculation.
No, I was doing this question on what is this, chapter 7?
Chapter 7?
Yeah, and then I put it under profit or loss. I put it on the debit side.
Or you were doing the C account on profit and loss?
Yeah.
Okay, do you mind getting me to the page? Okay.
Let me just see where I was. I have it on my book. Let me just check.
Okay, take your time to watch.
No, I don't think it's not from the study guide. It's from it's not a prescribed book, but it goes together. You see, when you're reading the study guide, they refer you to chapters on the prescribed book, but we don't actually have a prescribed book. That's why I took the question.
But was the question on the prescribed book?
Yeah.
Okay, no, it's fine. I don't have my book with me, but I do have a prescribed book. Email me the question, then I'll visit my book and I'll give you. But I'll give you next class so that everybody else will be able to have clarity on that one.
Okay.
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 Okay, cool. But I will see what is what. The first time I encountered the fire in and fire out, we were doing the trade and other payables control account. And what I know mostly is the inwards and the outwards in terms of the carriages. But I will have to have a look at that one. I will get back to you next week, Saturday, to everybody else.
Okay.
Thank you, Puse. Don't forget to go through page 124, and then you'll be able to see what you can do under that. Okay, page 127, it has additional purchase cost when you calculate your cost of sales. So that should be easy for you so far because you've dealt with the carriage on purchases, the additional cost and stuff like that in order for you to calculate your cost of sales. But I don't think we've got much enough time for me to do the closing off procedure, but I would like us to actually agree on next week we'll do questions on the closing procedure as well as the adjustments. It's going to take long. We just have to spend our time on that one. And I know it's going to be a little bit tricky to most of you. Should we have time, then I can just pick up a bit of a questions in terms of the depreciation, and then we will take it from there as well. All right. So are there any questions so far? Right. Enjoy your weekend and thank you for tuning in. I'll see you next week, Saturday. Thank you very much.